Hi everyone, and welcome to the channel Market Movers. Today, we're going to be talking about stock investing. Stock investing is the process of buying and selling shares of ownership in companies. When you buy a stock, you are essentially buying a small piece of the company. And when you sell a stock, you are selling your piece of the company. Stock investing can be a great way to grow your wealth over time. But it's important to remember that it's also a risky investment. The value of stocks can go up and down, and you could lose money if you're not careful. That's why it's important to do your research before you invest in any stock. You need to understand the company you're investing in, and you need to be comfortable with the level of risk involved. In this episode, we're going to cover some of the basics of stock investing. We'll talk about how to choose stocks, how to manage your risk, and how to track your investments. We'll also share some tips from successful investors. So, whether you're a beginner or an experienced investor, we hope you'll find this episode helpful. There are a few factors to consider when choosing stocks. First, you need to think about your investment goals. Are you investing in the long term or the short term? Are you looking for growth or income? Once you know your investment goals, you can start to narrow down your choices. You can look at a company's financial statements, read analyst reports, and follow the news. You can also use screening tools to find stocks that meet your criteria. It's important to remember that no one can predict the future. Even the best investors make mistakes. So don't be afraid to do your own research and make your own decisions. No matter how careful you are, there's always some risk involved in stock investing. That's why it's important to manage your risk. One way to manage your risk is to diversify your portfolio. This means investing in a variety of different stocks. This will help to reduce your risk if one stock goes down in value. You can also use stop-loss orders to limit your losses. A stop-loss order is an order to sell a stock if it falls below a certain price. This will help to protect your investment from large losses. Once you've invested in some stocks, it's important to track your investments. This will help you to see how your investments are performing and make sure that you're on track to reach your financial goals. There are several ways to track your investments. You can use a spreadsheet, a financial website, or a mobile app. Here are a few tips from successful investors. Do your research. Don't invest in any stock without doing your research. This includes understanding the company you're investing in, as well as the overall market conditions. Be patient. The stock market is volatile, and there will be ups and downs. Don't panic if the market takes a dip. Just stay calm and stick to your long-term investment plan. Don't try to time the market. No one can predict when the market will go up or down. So don't try to time your investments. Just invest regularly and stay the course. Rebalance your portfolio regularly. As your investments grow, you'll need to rebalance your portfolio to make sure that it still meets your investment goals. This means selling some of your winners and buying more of your losers. The stock of the day is MasterCard. MasterCard, ticker sign MA, is a good stock to invest in for a few reasons. Here are a few of them. Strong financial performance. MasterCard has consistently reported strong financial results over the past few years. In its most recent quarter, the company reported revenue of $5.7 billion, up 11.2% year over year. Earnings per share were $2.76, up 22.1% year over year. Growing market opportunity. The global payments market is expected to continue to grow in the coming years, creating opportunities for MasterCard to grow its business. According to McKinsey, the revenue opportunity in the global payments industry will be $3 trillion in 2026, up 43% from $2.1 trillion in 2021. Competitive advantage. MasterCard has several competitive advantages, including its strong brand, its global reach, and its innovative technology. These advantages help the company to maintain its leadership position in the global payments market. Attractive valuation. MasterCard is currently trading at a reasonable valuation. The company's forward P/E ratio is 29.7, which is below the average P/E ratio for the S&P 500 index. Overall, MasterCard is a well-managed company with a strong financial performance, a growing market opportunity, and a competitive advantage. These factors make MasterCard a good stock to invest in for the long term. Here are some additional factors to consider when investing in MasterCard. Risks. MasterCard faces several risks, including competition from other payment processors, changes in regulations, and economic downturns. Your investment goals. MasterCard is a good stock for investors who are looking for growth and income. However, it may not be a good stock for investors who are looking for a low-risk investment. It is important to do your own research before investing in any stock. That's all for this episode of Market Movers. We hope you found this episode helpful. If you have any questions, please feel free to leave a comment below. And don't forget to subscribe to our channel so you don't miss any future episodes. Thanks for listening.